All right, so let's get going, folks. We're going to go ahead and OODA Loop our charts here, get a plan for today. Thanks for coming out for opening bell. Just a reminder, as always, trading futures contains risk and only risk capital should be used. It's very important that you use stops. Number one thing that we want to stress to our traders is to use stops. Use risk capital. There's been a lot of things been going on in the markets and crypto, and we want to keep everybody safe here. So our goal today is not to predict where the price is going to go, but our goal is to have a plan for when the price goes in a certain direction. We have a plan. If it goes up, we have a plan. If it goes down, we have a plan. If it goes sideways, we have a plan. So again, trading futures contains risk. Only risk capital should be used. So how are we doing this morning, Travis?
Wonderful, Rob. How about yourself?
Doing good. Had a good weekend. Did some little chart work yesterday. Nothing spectacular, but just kind of cleaned up my charts a little bit and looked at some levels. So we'll kind of go through those levels today here as we OODA loop our charts. So why don't we do a little overview of our 5-minute, our execution chart, and then we'll start going to the longer term charts.
Perfect. So 5-minute, we're above the EMAs now. White's the 200, the blue is the 89, yellow dash is the 21, and the thin yellow is the 10 that's right up under the market. So the EMAs are in order right now: 200, 89, 21, 10. You might be familiar with the 90 or the 20. We use the 89 and 21 because those are both Fibonacci numbers. Very, very minute differences, if you will, between the two.
Mm-hmm. Yep.
So started into a good little uptrend this morning after making a double tap on the bottom side. If I look back, though, we were here Friday and overnight. So really just on our way back to where we were. If we got back to those highs at 40 or so, I might not want to fill through there in a long trade if I'm still long, or maybe scale out at the time if I have a multiple contract position. Just a thought, because in the same way we made a double tap down low, we have a double tap on the top side.
Yep, we're operating in a big range right now. Mm-hmm. Some may even call this a chop zone. I would say that you really need to focus on getting good position in your trades. As we move forward, we're probably going to see the volatility increase as well. So focus on your stop, making sure your stop is clear. Why don't we start with the dailies? I mean, the weeklies instead of the dailies today. The weeklies should have a pretty nice picture of what the price has been doing over the last week. And boy, this has been coming down. So you can, when you go to your dailies, we'll just switch it over to a weekly.
So the way you do that is up at the top and see where it says day, week. I'm going to choose 1 week. And now this daily chart swaps to a weekly chart.
As you can see, it's all red. No green at all for the last week. 1, 2, 3, 4, 5, 6, 7. Last 7 days has been all red.
No, those are weeks.
No, I mean last 7 weeks. I'm sorry. Last 7 weeks are all red. So I was looking at this yesterday, and boy, there's nothing really telling me that the price wants to go up, other than a short term. Maybe we might get a retracement, having the price come back up. So how would you look at this weekly chart, Travis?
Well, it's a sense of kind of position versus direction, right? Position says we've been going down for a long time, so it makes you lean towards, well, should I think that it has to go back up? But direction tells me we're so emotionally down from a weekly point, like you said, 6 in a row. The one time we did pull back, that turned into a big wick that pushed right back down, so it already confirmed we didn't like being there. But when you look at these last 2 weeks, we tried to push up once and came back to the center. And then last week, we tried to push down all week, but then came back up. So to me, the last 2 weeks gave a pretty strong idea of we've pushed a long way down, and now we're trying to figure out, do we want to keep pushing down or go back up? That top level at 4,300, obviously by the time we're back up there, we're a couple hundred points up, but is a good sign that this market may want to climb and continue climbing because it would break through a double tap from 2 different weeks that tried to break through there. And then on the bottom side, same thing. If we made it down under this bottom wick where we rejected last time, you could see that was a key level from exactly a year ago. Ironic as that
Exactly
might
a year
be,
ago. Yep.
it's pretty cool how if we go back a year, it was drawing bodies to wicks. We'll show that on the daily in a minute. But if we pushed under that level, that'd be a sign that any support that I had seen or that other people might have seen could be broken. And when you look before that, again, this is a weekly chart, but pretty big gap between that last level we got comfortable and the next one.
Yeah.
So you might see a good 100 points or so, if not 200, 300, 400 points or so, which is a long way on this market.
Yeah. And then we start getting down to what we had talked about on the dailies with the high before COVID, before that hit. So again, folks, we're not trying to predict we think the market's going to go down. We're trying to build some levels. If the market does go down, we have a plan. If the market goes up, we have a plan. So there's that level back in between February and March. In February,
right here,
all the way down to 32. Yep. By 3,300 or so.
And there's our big COVID drop. We've not seen a drop like that since.
And that only happened just in a few weeks. You can see how we've been just grinding down. It almost looks like it's like sometimes when we grind up, but typically when we see drops, they happen pretty quick. That COVID drop, you can see how many points we lost in just a few weeks. Here, we've been grinding down for 7 weeks. And if you go back to, January, well, we've been actually grinding down since January. So that's half the year.
So one thing I do want to add to that, kind of the underlying message there, you talk about with COVID, it was only 3 or 4 weeks and we rebounded back up. In the same way that a couple huge candles in one direction doesn't make a trend, it feels like COVID had a little more of that springy to it, where now we've got 6, 7 weeks in a row, like you're saying, that are just grinding down. Shows a lot more kind of background pressure in that direction, if you will, than one emotional event in my mind. Kind of how it's balancing out over time rather than one emotional move. It seems like we're really just creeping down now. And until it shows otherwise, I can't be long biased. So there are both sides to that coin. It's if a downtrend continues, I can't doubt the downtrend because I know for 6 weeks in a row we've been down. So even if I see 3 or 4 retracements, I have to think, well, we've been down, the market's been going down. I'm going to follow my rules until it stops working. There are times people will get skittish about their trades once they see a couple retracements and they say, well, how long can this keep going? Well, at least 7 weeks and it's still going. So to me, I'm just going to let the market show me what it wants to do. The other side of that spectrum, if we really started breaking upwards and breaking key levels, I need to learn when I need to let go of that downtrend. Still just letting the market show me what to do, but there is so much headroom to the upside, even of the last couple weeks, let alone 3, 4, 5, 6, 7. Every week's been down. So if you picture that market kind of like a big rubber band, we're just stretching and stretching and stretching down without even a retracement, like Rob said. We've just been going. So even if it was to continue down, it's unlikely to do that without a retracement to just go forever. So just following market patterns, we're probably due for a retracement at some point. But being in a downtrend, I don't know when that is.
Yeah, we don't want to predict when that's going to happen either. That's one of the worst things I've got myself into is just trying to predict like, oh, it's got to go up from here. Well, okay. It doesn't have to do anything. It's the market.
Yeah, and a lot of times a retracement, any trend, the problem is you don't know how far it's going to retrace before the trend takes back over.
Correct. So I just thought it was kind of a neat look on the weekly.
No, it is
interesting look to see that these last 6 weeks, 5, 6 weeks have been just down. It's tried to go up a couple times, but it hasn't been able to regain it. So
all our EMAs are in order still long though from the weekly standpoint. We broke through the 89. We're almost to the 200. I don't watch those enough to know how they would react from a weekly chart, but it's just intriguing to me to think that we could still be in a pullback because of how unreasonably long our last couple years were.
Yeah.
We never really had a deep pullback on our uptrend. So when we're looking at this trend, if you will, we're just now back to the 89, which is when you start to question the trend. But the way I trade, the 200 is my kind of last line of defense for an
Mhm.
uptrend. So really, this market could pull all the way back to the 200 and still not even be an unreasonable retracement. As much as we feel like, whoa, look how far it's gone down. Yeah, but look how far it went up before it decided to finally retrace.
That's perspective, right?
Mm-hmm.
It's all about perspective, and and this is why we really try to focus on these bigger time frame charts, so we can get a better perspective on it instead of just being glued to a 5-minute chart and some execution intraday chart. Having a little better perspective on the longer term time frames, kind of gives us a little more, well, again, perspective on what's happening.
Awesome. So let's turn this into a daily.
Mm-hmm.
So instead of weekly, I'm going to choose a 1 day now, back to a daily chart.
Oh, and two, Jeff, I see Jeff's here. Hey, Jeff, good to see you, bud. If you want to jump in at any time, of course, you're more than welcome. Same with anybody else. If they have some comments about what they're seeing on any of the charts that we're going through, please don't hesitate to jump on the mic, type in chat, whatever you want.
I think that's one of the best things about FNL is how welcoming we are to literally anybody's
Mm-hmm.
opinion, if you will.
Mm-hmm.
Obviously, there's a level of respect and an underlying we're here to trade, but anybody can come on and say, hey, this is what I see. What do you think about that? This is where I'm at in my trading. What do you think about that? This is one I took, or whatever it might be. So,
yeah,
everyone's welcome.
You bet.
Daily, we see the same down move. Pretty strong down. We do have a few little retracements in that down move. Looks a little more like a downtrend when you look at the daily rather than the weekly that is just straight red.
Yeah, these actually have some nice pullbacks to them, don't they? So we have some lower lows and some lower highs here. So that really kind of reinforces. So if I looking at this daily today, what would be a realistic number if we did decide to go up today? And remember, we're going to try to have some levels for going up. If the price goes up, if the price goes down, if the price goes sideways, what would be a realistic level looking to our left for this price to go if it did decide to go back up from where it's at now at 4,009?
So from the daily, I like that big zone that we made back in late February. The bottom of that zone is the bottom of the wick around 4090. We've used that number a few times. So 4090 is going to be my first target. The one after that is going to be the bottom of the next zone. So both 4130 and 4145. So I have 4090, 4130, and 4045 are 3 different targets I would look at on the upside, seeing how they were an old support level. And oftentimes in a good trend, what was support becomes resistance. You also see it line up very, very well with how this channel is. It'd be kind of between the top of the channel roughly. So if it turned around anywhere between this 3090 and 41 something and then started to point back down, that could be the perfect retracement to continue our down. So no matter how good our long looks today, I have to look at when we're approaching these levels, what happens and do I want to trade through them? Because there's a good chance that the market hits them and wants to turn. I can't choose the end of a trend. There's also a good chance if we go up 100 points, we continue going through those levels, obviously, but you're very likely to see resistance there. And if the market does turn at that level, that creates a picture perfect downtrend with another retracement and what was already a good downtrend. So I have to be weary of how hard I hold on to a long, even if we have a really good long day for the first couple hours. If it shows me a turnaround and starts going back down, a big downfall of a lot of people is they'll do great in the long trend on the way up, and then it starts to come back down and they go long, and then they go long again, and then they go long again, and then they go long again, and they realize by the end of the day at a certain point, they were in a picture perfect downtrend. But because they had 3 or 4 good trades in the morning and went long on each retracement, they took every single turnaround in the long direction on the way down, even after getting through the EMAs. So you might use either the 89 or the 200 EMA as a good drawing point to say, when we cross back under that, maybe I shouldn't go long anymore. Or a good defining point, I should say, not drawing point, but a defining point to say at a certain point I have to stop chasing that long trend. So I'm not saying it has to turn around there. I'm saying if it does, be weary, because it's a very good place to see it turn and continue from this retracement in its downtrend. And if that happens, one of the worst things you can do is give back a good day because you had a long bias and thought, man, it has to go to the moon today because we started out going up. And then you lose too many trades on the way back. So just a
Well,
thought there. It's happened to me as much as it has anyone else.
yeah, and if you go back to Wednesday of last week, I believe it's Wednesday. If you just count back Wednesday of last week, you can see how we started up on that candle, and then look what happened. So we started up actually, and the price was moving up pretty nicely, and by the end of the day, it was down pretty heavily. So that looked like that was going to be a day where, holy mackerel, here we go, nice retracement coming, and it didn't end that way. So
the 4-hour shows this cleanly, but what was support became resistance on a channel that I actually really liked. Again, this was drawn off the 4-hour, but these markets both days came back and retested that channel to push down, came back and did it again to push down. It was really cool to see. We talked about it before the fact that that's what we'd want to see happen. And even before any of those happened, we had that channel drawn. So it's kind of following common tendencies of the market, if you will. You want to jump to the 4-hour?
Yeah, let's go to the 4-hour.
On the bottom side, I like 38.43. I don't know that we talked on the bottom.
Oh yeah,
side
let's talk about
targets.
the bottom side a little bit. I would say, we're at a key spot now. We'll see it more on the 4-hour, but if we can drop below your channel there, it looks like.
Yeah, it seems like we just turned around at it, and we're trying to drop back under. We'll see.
Yeah, and there's not a lot to hold us from going down to 3,900 or so. So there's a good 100 points below us. We could recapture that whole green candle in a day. Would not shock me at all. So I would say our first level would probably be around 39.90.
Hold on,
then maybe again around 39.61. And all I'm doing is I'm looking to my left and looking at where the candles where we opened and closed on previous days. That just gives me a little bit of a guidance in terms of where the price might like to be. I don't want to say rejected, but if we get through these certain levels, then we could look to see it run. So a run down to around 39.15 would not be unreasonable at all if the price were to drop today. So.
All right.
Yep.
So 4-hour?
Yep, 4-hour.
Dog got a hold of something she should not be chewing on. I look over, I just hear crunching. It's like, well, gotta go save that one.
That's it. So this looks like a really good spot to go short, doesn't it? I mean, if it doesn't break.
Absolutely.
This turns around here. This is a pretty ideal spot for the price to go short. Now, we're not saying the price is going to go short. What we're saying is on this 4-hour chart that we have a lot of room below us down to kind of that level we just talked about a second ago. Even if we were to do a retracement on a move back up, we could be looking at this coming back down to 39. Half that move would be about 39, probably 30 or so, somewhere in there. So if the price were to retrace, pull back down, and then once they gather steam to go up, we could look at pulling down to around there somewhere.
So let me pull the fib levels down. We'll make it look clean.
There we go.
I need to turn that around. So if it's even a pullback in the long direction, it's still likely to pull back 382 to 50%.
Mm-hmm. That's assuming the price doesn't just take off like a bat out of
Yeah, it definitely could go short from here because again, I talked I was going to show on the 4-hour. You can see how we broke down. We came back, turned around right close to the channel, pushed down again, came back, turned around right close to it. One of the strongest pushes we had was the first time it hit, and then the second time we hit, same thing. Those are two of the biggest reddest candles we've had. But once it turned off of this area, so it's not that it has to. We're definitely fighting it right now. If we break under this key level again, that's a pretty bearish sign to me that it's going to want to go down. So that's one where I might start extending gains a little bit from a short direction, knowing that we've had a pullback in what was already a larger term downtrend. We talk a lot. I think the subject of this week even is kind of trailing stops and how do you decide whether to just use your risk management or to go for that extended gain. And when you go for the extended gain, how do you decide where to scale out or just go for the moon, if you will? Because I think the underlying theory there is it's not worth going for a 100-point gain every time you risk 3 points on a trade. It just is unrealistic to choose spots on the market that it goes 100 points from one spot. So income scaling out. But bottom line, this is a larger chart showing me headroom. Think about if this were a 5 minute. What would our headroom be? Well, it'd be from the turnaround about down to the last lower low, right?
Mm-hmm.
Well, looking at it the same way as a 5 minute, from where we're at we'll just say 4,000. We're a little above 4,000. We'll call it 4,000 down to almost 38.50. We could call it
200
38.75.
points.
Yeah, exactly.
Yeah.
So 125 points at least, which is a lot of headroom in a trade.
Yeah.
So this is a chart that shows me if it goes down, it's supposed to go down not only 5 or 10 points for my gain, but there's over 100 points of headroom for the next downtrend to continue. And that goes back to what I was saying before about as long as this trend retraces and shows me a good entry, I'm just going to trust it for as long as it happens until we get down to roughly, I like that bodies to wicks area. So I'd look at the bodies on these candles and say 38.73. I could say 38.75. Even 3800 could be a good one, but 3900, I mean. But bottom line, just seeing how we have 100 plus points of headroom if it turns into a short trend.
Now, what if the price decides it wants to go up? What levels are we looking to break? And then what could be a target for us if the price were to go up here?
So definitely
There's
want
our
to see it
first.
through that channel. Go ahead.
So you can even put our first level almost where we're at now because
Yep.
we're at the top of the mark too. So our first level you might put somewhere in here, right? Get above that. Then we're going to trade, and you already have a level, so we can trade to that level. Would be our next level we'd want to trade to, right? So if we're going to trade level to level, that would be our first. That would be our second. There you go.
Next one, we talked about these two.
Mm-hmm.
One of them at 40.90 if we make it there, and the next one at 41.31, 41.30. Same two levels. I'm just extending them to now on the charts, and then we'll get through our smaller ones.
And then if the price decided it just wants to chop at this level, at this 4,000 level that we're kind of at right now, we're sitting at 4,002. So it may decide just to chop here for a while. And if it does that, then it's going to be a little tough to trade because we really don't have a direction. Bias is short as I'm looking at all these charts. But again, if we, if we do get above these levels, then yeah, time to look long with some room above us.
Okay, 1 hour. Let's go see what's going on.
Mm-hmm.
Same picture, kind of the downtrend, the retest of the same channel twice there. You see it a few more times reconfirming that on the 1 hour. So where the 4 hour only went up to it once, you see on the 1 hour how we really stalled out. We left that area and then we came back to it again, and twice, 2 hours in a row, came up to that level and rejected off of it. So it shows me a lot of rejection there, just reconfirming what we were already seeing. So if we are to break under this level, very, very bearish right now. Definitely testing that to me, which explains a little bit of uneasiness sideways, maybe even emotion in both directions right now. So
a little choppy right now, a little choppy, which is not, doesn't shock me right now after what we've seen. We have not been able to make a new higher high though, if we go back to May 11th. So, we'll see what happens here.
We actually double tapped right at that area too.
Yep, exactly. So that tells me the price may not be ready to go up yet. Now, if we break that, that's a very good sign that, hey, this market's going to want to move up. So if we do break that level, that 40.50 or so, actually it's 40.45, something like that, man, this could really want to run up. But until that happens, All right, head over to the 15. That's really showing me a chop, isn't it?
Absolutely. We're above the 89, above the 21, coming back through them. So you see that bigger channel is the one we're rejecting off of. Interesting to me to see how we're at the top of a key level, and that's where we gapped up from at yesterday's reopen. So that was pretty cool.
Yep. And we are below the close from Friday now. So we've been kind of going back and forth through it.
Five minute?
Sure. Let's go to the 5.
All right. So
if anybody has comments, hey, Randy, good to see you, bud. If anybody has comments, don't hesitate to ask or ask questions or comment on what they're seeing in the charts.
So where my charts look a little bit busier because this is usually my execution chart. So you'll see on the 5 minute a few more key levels. The orange ones will be the opening range. This bottom one was Friday. The one above it was Thursday. I just kind of remember that. You can shrink it to double check, but see how one's Friday. The one before that's to the day before. Anything orange is my 30-second range. I like to use the day before's 30-second range, so I will extend Fridays. No guarantee that we're going to get there, but if we do, likely to become, today's the 16th, likely to become relevant when we get there. I also wanted to use this level this morning, see how we had a double tap. I even wrote on the charts 39.8150 to 89.25.
Yep.
Might try and draw this on your own chart, seeing how we had a double tap. It's a bodies to wicks area. There's no guarantees, but what would this do for me? Okay, I have a box on my charts. What now? Well, it's a target. If you're in the short direction on any retracement, you want to be able to fill before hitting the top of this box, knowing that it's likely to become support there. If you have reason to believe that it should turn around, maybe you look for confirmation of a turnaround at that key level. Now, you might be against the trend, so I'm not advising that trade, but it is one way to use this level. Now, my favorite is going to be if we approach this level, strong downtrend, we're already thinking bigger charts say down. If we broke through that level, let's draw the bottom too, and then come back up, a lot of times we'll turn around on the bottom side of the level, but if we can turn around, that is the confirmation of a turnaround at a key level that I almost want to draw in yellow. Like that is my perfect trade to let it push down and look for a trade there. So even though the key level said support, I think the most common idea is, well, I have to go long every time it hits. And then you see a really good downtrend come in, probably show a little resistance, almost fill you, and then keep running away. And you think, wow, I made the right decision. I'll do it another day. But is it the right decision? Or should you not have traded against it? Where maybe in a perfect world, again, you see us hit a little resistance, then break through, and then come back and retest that level. Now I've got all sorts of things telling me we're already in a downtrend, but we're turning at the key level again and have the headroom to just go. So instead of fighting the trend, I want to use the level with the trend. Right now, we're showing a turnaround at the 200 for the opening bell candle. That's tough.
We're in a spot where our position is definitely better to go long.
I know, that's what I'm thinking.
No doubt about it. No doubt about it. And since on a smaller chart, since 3 this morning, we've been coming up. So since the London Open, pretty tough. But we really did not close lower. So we did not close on a lower low, because I would have to say our lower low right now, if I was going to mark it, would probably be, I would like to see it close below that. Once it closed below that, then I've got all this property down here I can reclaim down to your level, right? But it did not close below that. Look what it did. It rejected. It looked like it wanted to, but it just could not keep going. So this right here, folks, I would say this is my chop zone right here. It's kind of a big chop zone, but I don't know which way to trade in this area. This is not my area to trade. I would say if I'm going to trade this area, what am I going to do? Well, I'm going to go long at the bottom. I'm going to go short at the top, and I'm going to try to stay out of anything in the middle.
So I like this channel. I like that we have 4 tops on the top side and that these 2 bottoms are on the same angle there. So that gives me a little confidence in opening bell that if I'm going to go long, I'm going to bottom feed right around 4,000, and that's going to be my trade. We're almost there now, actually.
Yeah, we are.
And that's going to be exactly what I'm going to do. So even though emotion says down, my OV trade's going to be a limit order from the bottom here around 4,000, maybe even 4,001, and it will be a 7.5 if it comes to get me, knowing that that angle has been strongly respected on the top side. We already showed a little bit of a want to turn around, but it never closed green, so we have a minute till OB. My order will be a P7 S5 from 4,001. What are you thinking, Rob?
Yeah. I mean, I like I like a short better in terms of the momentum right now. There's no doubt about that. We're below the 200. The problem is my position right now is so horrible to go short that I can't. What kind of stop can I clear going short? Like nothing. There's literally nothing I can clear to go short. I have no discount to go short right now.
We've had an almost straight run from the top up there, and that's 25
Exactly.
points above us.
Exactly. So I would say that I would have to probably look to go long here as well. And yeah, I think 4,000 is a great spot to take a shot going long. 4,001, 4,002 even. So if I want to clear a stop, what am I looking to clear here? That wick. So the wick is at 97. 98. So 1, 2, 3, 4, 5. That put me at
03.
4,003. I could use a 7.5, a 6.5 at 03 and be okay. Or if I want to bottom feed a little more, we could do it at 02. You know? So I think I'm going to go long as well based on position. The momentum is definitely down right now, but boy, I just can't clear any stop going short. So I'm going to go for it here at 03.
And right now we're in. I almost want to take that order. Yeah, I missed it.
I missed it.
Same.
Dang it. It just missed.
It's
Oh,
okay.
wait, he'll get us. There, now we're in.
I missed mine. Mine's at 02. Is yours at
There we
03?
03, yep.
Yeah, I should have. I like that position.
Yeah,
I like how it's turning
I cleared the
around.
wick. Yeah, I cleared the wick, right there. So, and we're forgetting. I just did a 6.5 here, folks, because I don't not want to make. I'm trading a retracement basically. So it came within a quarter point of filling. So I feel like I'm trading a retracement. That's why I'm only going for 6 points on this one.
Oh, we need a 30-second range. I don't have.
Let me go. I can get it. All right.
30, so it's the bottom side. I just got kissed on my order. Oh well. The bottom side is 0250 and the top side is 0875.
Okay. And we filled for our opening bell trade. 2 contracts, 6 points.
I went to find my OB range, literally came back, kissed my order,
look at
ran
that.
out. And I would have filled too.
Yeah,
woulda, coulda, shoulda, whatever. So this is where early on, me as a trader literally walks away so irritable from this situation, especially if I'm live. I mean, I'm going out like steaming so much there's probably hair falling out of my head. Like I'm angry, just like I should have this many points today. And then what I realize over time is that no single trade is going to make the difference in my trading.
No,
but seeing that does that tells me that I was kind of on the maybe I moved my entry by a quarter point over time. I need a sample size, but seeing the market, I'm going to cancel this order right now. I need to get my 30-second range in. I shouldn't be talking, but seeing the market do that is a good thing, not a bad thing. It tells me, well, I was on the right sign. I mean, that did exactly what I wanted it to do. I just didn't walk away with anything. So let me get this. What did I say? 0250.
Yeah, 0250 on the bottom, 08.75 on the top.
50.
So I have not put in an opening range trade yet. I'm going to do that here in a second. And it's probably good because it would have been chopped up pretty good so far.
Yeah, I liked that trade and I missed it. It's kind of frustrating still, but it is what it is. 30-second range, load, apply. But to anybody who hasn't had that happen, you will have a day where you miss your trade by minimal mark. I need to get in. You're getting in short out the.
Yeah, I'm already in short at the bottom. So 0250 short with a 2-point stop. And we'll see if this can get some legs here and we don't get too chopped up. So this is our first opening range trade of the day. Yeah, I see Mark's having some issues here. Hopefully he can stay logged in.
I'm out of that one.
Yep, me too.
See, it's tough because the bottom of this opening range is right where the channel tells me it should go long from. So, yep. I mean, that's where I almost want to.
Choppy, choppy. See if we can get some legs here. I'm back in.
Same. So we are under the 200. We're under all the EMAs.
Under all the EMAs. So remember, our biases were short when we OODA looped our charts. Our biases were all short. They all looked short to us, but our position said go long at OB. So I did a 2 contract trade, 6 points.
And it looks like both could be correct.
Good. There we go.
Yep.
So we just filled on our first contract. So to limit my trade, my losses here, I'm going to move mine down to a scratch for my second contract. So if this does decide to come back up and stop me out, oh well. What we're trying to do is grab momentum here, folks. We're not trying to, hold on to stops for a long time. We're trying to grab momentum. So hopefully this will go down another 8 points for me. We're halfway there.
My first 2 are at 4 right now. My second one at 10. And that's something that I've building a sample size on, and we'll see how it goes. It's working pretty well right now. And I also like to scale, so I'm back in now with the same 2. So I had a 4 contract trade. I filled on 2, put the same 2 back on because the larger chart said it should go down, and the smaller charts were doing that now. So it's kind of in line with the longer term trend, if you will. So we'll see if it can hold. As long as it stays under the 200, I stay in this trade.
Yeah. And I did get stopped out of mine. Well, not stopped out. I got 4 points on one and 3 points on the final 3 contracts. I'm sorry, that was a scratch. So +4 on that trade. And then I got in again here now. So I'm going short again at 0250. So our first trade was a +4. And we're getting close to the pay line again on our second trade.
Did you get back in?
There you go. Yeah, I'm back in.
Nice.
Yep. And we just hit our 4 again. So time to pull my stops down for a scratch trade on my final 3 contracts.
I was writing in. Oh, sorry, go ahead.
Hopefully it won't come back up and get us out. Hopefully we keep this momentum going, and here it goes. So getting 8 points out of this next one will be ideal, because then we can move our stop down even a little bit more, or we can separate our stops a little bit too.
Okay, so similar to you, Rob, I stopped out one time, taking a stab at it with 3 points, 4 contracts. The second time got back in with 4 contracts, filled with 2 on +4. Re-entered into 4 contracts, filled with 2 on +4. So that's 2 separate sets of 4. And then since then, we have a runner that will fill around 10, and then a final runner that is way, way out of the way. I think I started around 20 points, but this is one that I will literally drag so far out of the way that we just see how far the trend can take me. My last contract is a kind of my own, I don't know the word I'm looking for, to see what I can do with 1 contract and a runner to see how far I can get it to go. A home run swing, if you will, with 1 contract.
Mm-hmm. Yeah. My final one, I've got down around 39.70. So not to say that we'll get all the way down there, but if this does decide to run, I want to have a final contract that's able to just go with the momentum here. So we came down within about a half a point of filling on that final contract, 8 points. Not final contract. I'm sorry, my second contract.
Here we go again. Is it going to get me back in? I got to zoom in to go see. Yes, we are back in again with a 4 right off the bottom. So back into 4C again. We'll go to yellow. I know I'm drawing all over my screen, but sorry, go ahead.
Yeah, no, I just got stopped out, and now we're just gonna have to wait. But I had moved that to a scratch, so that was still a +4 trade. Now we're gonna try and maybe do it at the top side. Oh, jeez.
That's scary.
It is. Did not get me in. Okay, we're in the top side.
And we're out.
And still have not been able to catch the momentum going one way, folks. We're still just chopping through this opening range. We have hit our pay lines a couple of times at 4 points, which is nice.
So I missed position. I tried to hit a market order because it was sitting there and I lost almost 2 points,
Boom.
but we hit our first fill. So
Yep,
still
so
working out.
Now I move
So-
my final three, my other 3 contracts up to a scratch. So the worst I can do on this would be a 4 points.
And I'm going to come back down. We're going to scale back in at 2 right off the range. Give it to me. Oh, we missed it by a quarter point if it runs up. I'm trying to figure out how far above the OB range. If I'm trading at least a 2 to 3 point stop, I like to leave it at least a half point or a point above the range. It seems like it comes back and tests just above it. I really like that. I haven't decided whether I split those and scale in accordingly with one contract still right at it. Like this one, it either kissed my order or missed me by a quarter point, and that would have been another 4 point fill. So again, a time that old me would be beating myself up right now, like, oh, I should have had this many. But now I just have to look at that and think, from a sample size, do I leave my order where it's at? Or do I move it up maybe a point above the OB range instead of, in this case, it's a half point above? So I'm still working on that personally, but I have noticed a strong temptation for the market to come back and test just above it. See, there's my entry point again, that it's kissed to the T, which is 0875, 975 would be a point outside of it.
I've watched it for a long time, and it very often, when it's going to run, it'll come back and it won't quite touch it.
Yeah,
exactly.
Exactly, Randy.
Get away. Yeah.
So this is another
Boom,
case where
come on.
twice within a point of my re-entry and would have filled a trade. So the way I've been re-entering to take that 4 contract fill twice now was within either a quarter point or a half point of that re-entry, and then went up that 4 to 5 points again. So that's 2 sets of a gain that if it had come down another quarter point, I would have had again, which is a good chunk of a trade, if you will. So something I'm working on as far as a sample size.
Yeah,
Exciting
we missed our 8 point fill by a quarter point. That's all right. Come on. Yeah, that's a nice trade to get one of those contracts out of the way.
Oh, no.
That's kind of like yes.
I know what you mean.
Yeah. So we're still, our trade's paid for though. So there we go. So we're out.
Back in.
Yep.
7-6.
So we scratched on those 3 contracts. We're just hitting our pay lines, folks, and almost getting to where we want, for the second contract, but it's just not getting there.
Yep, I'm out.
Yep.
Did I get back in? Did I miss it? Back in again. Missed the trade. Should have set a limit order, I guess, as it ran through the top.
Yep. It did not get in either.
It's a good case of why you would set a limit order at OB range, because you try and hit buy at the range and you miss.
Yep.
In this case, I missed 2 points. So I should not be in this trade. I should have had my limit order closer to it and just been quick enough to set it right there.
Mm-hmm.
And there would be the fill, should be where I should be filling my trade. I still might get it, but had I gotten the position I wanted, which I would have gotten, then I'd be scaling out again. So OV range is actually doing pretty well today from both sides. It has been a little choppy, but it tried to run out the bottom. Go ahead.
Yeah, and we've been hitting the pay lines too, so that helps.
It's gone at least 4 to 5 points out both sides, right? So I'm actually gonna.
So I'm down a few points, which is fine because we have not even picked a direction. We have not ran at all. So I'm okay with that, really, just being down a few points right now.
Team really shows that well. We've been bouncing between the upper and lower.
I can barely hear you, Randy.
Oh, okay. Well, I'm in a
That's
different
better
situation. So.
Yeah, you're not at home.
Yeah, I'm not home. But yeah, so it's on the 15, it's real flat.
Yeah.
You can going back and forth.
Oh, yeah. Yeah, I see that.
So I hadn't really found the momentum yet.
Yep.
Just like you said.
Yeah, and it's okay. I don't mind being down in the opening range trade a little bit. I mean, that's fine because I know that when it gets that momentum and I'm in it, guess what? It's going to be a nice big trade.
There it is, straight through again.
Chop City, folks. So if you're not trading the opening range, this is a good day to just wait for the price to tell you which way it wants to go. So we're in short now. And we hit our first pay line. We're going to move up to a scratch on this trade. Because remember what we're trying to do is we're trying to grab momentum for this price. And it just hasn't been able to find its momentum yet. Going in either direction. We've just been chopping back and forth. And we're out of that trade. So we made a +4 on that one.
I just got into it off the retest. We'll see. If you ever pick up your order and don't want to drop it anywhere, you can hit escape and cancel it.
Cancel it, yeah.
Dang it, I'm trying to cancel this auto trail. See the one that popped up to that's what I was trying to cancel, and I need to cancel it out of that trade. I try and do it before it happens, but too quickly I hit my fill and then came back. Execution is poor. I shouldn't be talking right now. I should have been able to cancel that, resubmit my order. I should have filled for 4, repicked up my trade, and then be in my trade rather than stopped out a point positive on my third contract. I need to cancel that trailer from doing it. But I reselected my strategy and it picked it back up. So that's on my own mistake. I should still have 2 contracts on, absolutely. The reason I say that is because that stop should not have moved a point ahead. I mean, it should the way I have my trade program, but I don't like it that way. I talked about that the other day, so I'm going to do my homework and cancel that out of an OP strategy.
And I missed this on the retest, so it came back up and kissed my retest.
I'd still like it. I mean, I hit my 4 twice. I stopped out +1 once, and I'm in the runner now. So as far as it runs, you see my stop move to lock in 3 at this point. If it keeps going, then we'll see how far it goes. Specifically, what does my trailing stop do in this trade? Well, it disappears when I go to pull up the properties is what it does. So if I hit edit, you'll see that when I'm 10 points positive, we go 7 points back, which means it locks in 3, which is what you just saw happen. If we make it to 20 points positive, we'll lock in 5 points back, which is 15. And if we make it all the way to 40 points positive, we'll lock in 35. And anywhere in that spectrum, if I want to, I can move my stop down. Like right now, I might say, I want to move my stop because I want to claim some of this emotional move down. As long as I get more than 3-5 points out of it, awesome trade. So I don't have to be dead set on 50 points. If I look at it and say 17's awesome, I like 17, why not squeeze it all the way? So I'm going to leave it a few points here, but I am going to squeeze it a little bit because I just don't want to give this back right now. And if it comes back up, I can always decide whether to get back in. I think a common problem with the traders, you see it run in your direction, and then it starts to come back, and you're like, oh, but it's got to keep running. You see it, oh, it's got to keep running. It's got to keep, and then you realize, I'm back to even. I was up 30 points, and now I'm back to even because I knew it was going to keep running, right? And it sounds kind of funny. If you haven't been there with runners, you will be one day.
Oh, yeah.
Because you'll have those money signs in your eyeballs and think, man, if I make 100 points on this with this contracts, that's how much money it's going to make me. And
you see how it's going right down to your level and rejecting off it too?
Yeah, let's extend that and look at what it's from. That's the one from this morning.
Yeah. Now, does that mean we want to go long off that? No, of course not. Right
No,
now,
it's
our
a
bias
target
has
for
to go
headroom.
short. It's our target for headroom, exactly.
Boom. Right where it's supposed to reject from as support. We talked about that earlier. Likely to reject here. Whether it breaks through it or not, it's likely to reject here. So seeing this rejection, like Rob said, does not mean, oh, I need to jump in right now. Again, what I want to do is squeeze my stop to the next key level down, so I'll be a little bit behind that next key level. Still give it a little bit of room to breathe if it wants to retrace. But a common mistake of traders is to see this double tap over here on the bottom and then think, wow, it has to do that again, and jump in long against a freight train of emotion in the down direction. Now, I'm not saying it can't turn around here. The market is very stretched to this level, but no, you are fighting a mass of traders right now to try and just jump in long at this level and say it has to. If somebody wanted to trade this level, my recommendation would be to look for something like this, where the market shows you over a balance of traders that it is turning at that level, and then think about clearing your stop. I'm still not saying that's a wise trade, but I'm saying my recommendation if you wanted to trade this level would be to look like something we had the first 2 times we hit this level, where you have a double bar confirming a turnaround out of a level. There you saw my stop move up because we hit 20 points positive, so it locked in 15. I'm trying to decide if that's too tight or not. Sometimes I'm comfortable with the 15 as it runs down. So I don't recommend jumping in long here. I'm still in my short trade and going to let it flow as long as it wants to. I might even back that off just a little bit, knowing that we're at the key level, and take 13, 12 or so, but I'm happy with where we're at. If we reject here and it takes me out, I have to walk away happy.
And for folks that were here for opening bell or for the when we were drawing our levels, remember what we said our first level to get below was to go short? That one, right? Well, we broke that one. Now what's our next level? Well, we've got it right here. Once we break that, come back down, use this to retest. That might be a spot to go short. So again, we're trading level to level. So great job, Travis. He's in this trade now, going from level to level. We broke down below opening range, got in a trade to trade to the next level, which is at 39.85. And boy, nice job, dude.
So Tom had a question. He just said opening range question mark. Yes, this is about the only thing that I do in trading that does not match my foundation of trading at all. I don't want to say at all, but Rob and Randy have written a little bit of a blog on the 30-second range. There's a few other thoughts. Oh, he's just asking for what it is, isn't he? Yeah, he's just asking for the numbers. I'm over here going into an explanation of what it is.
That's okay. You can go into an explanation.
30-second range is just the 30 seconds after OB opens. It is inherently respected just because that is where the market goes over that time frame. A lot of times people are trying to catch the daily emotion out of that area, and it gives a great place to see a long run from a short stop, potentially. So the goal there is to catch a longer move from a shorter stop, even if you have to take a couple swings at it. With me, I'm actually thinking about shortening that 3 to maybe 2 if I can, to see if I can catch the good moves that way. It seems like I might be able to, but again, I'm still doing a sample size on the 3. So
yeah, I use the 2. I use the 2, and I mean, I'm looking at going into a possible 1. So, all right. So again, folks, we are testing. We're trying new stuff. We truly believe that there is no one way to trade for everybody. So if we try different things, people are finding zones that they enjoy trading. And I know a couple of people that are trading this opening range and doing pretty well with it. But it is, it's a work in progress. If you do want to learn more about the opening range trade and you want to delve deep into it, you can go to the PAX group. Matt Kenna is PAX, really good dude. You can pay. It's going to cost you, but you can pay to be in his group as well. But we're going to try and learn it ourselves as well. And, we'll get a little info from time to time to help us out. So again, we're not going to sit here and just follow whatever PAX does. What we want to be able to do is try and learn to trade the opening range, do our due diligence, and practice. We've got a lot of really smart traders here in this room, and between all of us, we can figure out the best way for us to trade it. So Travis got his trailing stop, got him out of the trade, and that's exactly how you want to do it. Let your stop get you out of the trade.
Right.
Good job.
Thank you. So we ended up catching potentially most of the move before a green candle.
Yep.
Gave back about 5 or 6 points. Actually gave back 7 in this case, but don't mind it. Again, from a 3-point stop, took roughly 12, maybe 13 out of the trade.
But isn't that amazing how this level here, just the price came right down to it, said, nope, not going to go through it. Going to get back up into an area that we could be chopping.
I would tell you yes if I just started drawing levels, but it's kind of the anticipation. So as much as like, yeah, it's awesome, it did what it was supposed to do, it's like, yeah, it just did what it was supposed to do. And I think the longer you draw those levels, the more comfortable you get, almost like an awareness level with the market. It's like, well, that was a big move, and some people might be freaking out, and you look at your charts, you're like, yeah, it just went to the next level. Kind of feel like, yeah, this is normal price action. Everybody's showing up like, what's the news report? And you're like, why? It did exactly what it's supposed to do. It went from one level to the next with the trend, and you just kind of have this awareness that feels like there is chaos in the market, but maybe sometimes it doesn't seem as chaotic to you when you recognize what we're going between and what the market's doing on a level-to-level basis or a larger scale.
Yeah, we talked about all these levels, on our longer term time frame. So we literally had levels if the price went up and the price went down, or if the price chopped sideways too. So now we need to look for a confirmation of a turnaround at a key level. So 30% retracement would be right at the bottom of my daily range, which you have as well. I have a daily range. We're at it right now.
I have a box drawn, and I've seen Travis extend them somehow. How did you do that, Travis?
Okay, so you're going to pull up properties of your box. So if I draw a box down here, I'll either right click and pull up properties, but I want to select it where the dots show up, if I can click on it. And then once you see the dots, you can either right click and go to properties, or I like to double click just to know that I'm on the box properties. So from here, you get a few different properties. Two different things you might want to use. The one to extend it is where you see in time. It's under data. Your data might be behind a triangle, if you will. You'll have to open it up. But where it says in time, there's a drop down menu, and it'll give you a calendar, and I can choose however far to extend it. Usually I just go a couple days into the future, whereas if it's a daily level, I'll go to the next month even. But again, pull up your properties, in time, drop down menu, and choose it on the calendar, and you can go to the next day. And
thank you.
You're welcome. So one other thing you might use from these properties where it says attached to, it says 5 minute for me right now. If you wanted that on all your charts, you could pull down that first drop down menu, and the first option you have says all charts. You can't choose individually which charts. You can choose either the one you're on or all charts, but it's nice sometimes to just put those boxes across all the charts, and that will be all of your MES charts or whatever instrument you're on. So in this case, if I chose all charts, I would put that box on every chart instead of just the 5 minute.
Gotcha. So we're at a 50% retracement, Travis, of that move. 618. Guess where 618 is? It's at the bottom of the opening range. That move from up here
that makes
to
sense.
down here. Yeah, all right. It's like a perfect 618. Hey, good morning, Don. Good to see you, bud.
Good morning, everyone. Don from West Point here.
Beautiful weather in Northern California right now. It's going to be hot today. It's going to be hot this whole week.
So I'm going to change that channel to white that I drew this morning just to make a really important point. We talk about oftentimes what was support becomes resistance or a retest of a level. And if you look at how this white channel has acted this morning, again, same angle on both sides, gave me confidence that it wanted to hold. But if we're going in the down direction, what is the common tendency? The common tendency says we break out, we come back, we retest what was support as resistance, and then push down. So I can't assume it will turn here, but seeing a very strong wick off of this level is a very, very good sign. And now I'm going to be looking for if we get a diamond or maybe a little bit closer double bar, meaning, so in a perfect world, let's see if I can draw it. Maybe this candle ends up closing green and then the next one wants to be red, so it comes off of it and we see both of these wicks right against that level. Then I'm going to look to say, okay, now it's turning there. Can I get my stop above that area? And what would my headroom be on the bottom side? And if I can, after that red candle closes, so the red candle close will be my confirmation to say I want this trade. If after a red candle closes, I see that I can clear my stop and have headroom, I might take it at the close of the red candle. If I cannot clear my stop from the close of the red candle, but I still like the turnaround right from the channel, then I'm going to look at that area. I'm going to set my limit order a little higher, where my stop would clear and where I have headroom to fill, and basically say I'm willing to miss that trade the way it sits in order to have better position. Now, there might be situations where my stop doesn't quite clear, but I say, you know what, the close of this turnaround looks good. I'll cut the top of that wick off by like a point or so, not clear my stop, and be in that trade. But a large majority of the time, if I follow my own rules, if I'm being safe, what I'm trying to do is clear that stop. So I will be willing to miss that trade in order to get better position and have a clear stop when it comes back to pick me up, and then have the headroom to fill.
Right.
Any
And right now,
thoughts,
if
any
we're,
questions?
yeah, right now, if we're looking at a trade going short, well, if I'm going to do that, what stop am I trying to clear? Can anybody tell me what stop, if they did want to look at a trade going short? Nobody?
To me, there's a few different key levels, but I want to see the turnaround. And whenever it turns around, that's when I'm going to look at the market and just clear the turnaround where it happens. So I'm waiting on a turnaround to give me the spot to say that I need to clear. But the big one screaming to me is the bottom of the channel where it retests.
Or that wick, the current candle we're in right
Yeah,
now.
exactly.
So if this stays red with 11 seconds left, then I would look to clear the wick on this current candle. Because we have a green up and a red down. So
From
you'd be
the
kind
key
of,
level.
yeah, from a key level. So you'd be kind of front running the diamond here is what you'd be doing. So I'd be looking at, you know, if I was to get in, if my stop was, let's say our stop was at 4,000. Well, if I count down 5 from there, a 5-point stop, that would put me at 39.95 as an entry. That would be my minimum that I would want to do. I'd probably want a little bit better than that. I could even look to my left and maybe get above, you know, the one next to that, another couple points above that, but not a horrible trade. The problem is I don't have I got enough headroom. 5, 6, 7. Yeah, I got 8 points of headroom. So again, if I'm going to clear a stop, I'm going to try and my stop's going to be around 4,000 at 4,000. So if I count down from there, then that tells me where I need to get in the trade. So I'm building my trade around my stop, and you know, this one's just running away from us. So
Yeah, but if you were using a 5-point stop, let's see, what's that? 99.25 puts you at 94.25. You might have missed it by a quarter point, half point or so. So if you had a little bigger stop, you'd be okay. So with me, I have a couple different rules on how long I leave this order. Because the move has already happened, I'm now going to cancel these orders. So it's already made it back to the last low. The expectation from that turnaround said that if it turns around at this key level, right where it was supposed to, it's in theory going to go from the turnaround down to the bottom. Well, because we've already hit this bottom, now this is the place where anybody going long wants to jump on. So for me to leave a limit order sitting, now I'm jumping in the way of all the people who just decided to take this trade. Rather than getting on the bus with everybody getting on at the turnaround, they've already gotten off the bus. They got on the bus, they got off at their stop. If they're still on, they might be scaling out, but everybody who took that trade with a clear stop and headroom to fill just filled. So I don't want to jump in their way on the way back through.
Exactly. Yeah, and I had a limit order at 95, so did not quite get up there, and that's okay. I can't look to try and capture every move of the market. I can just try and capture the moves that I feel give me the best position and trade with the trend. So I felt like a limit order at 95 was a pretty good spot. Did not get it. So now I just wait for the next spot. And so for me, the next spot would probably be, hopefully, I'm going to look for this to make a lower low and then have another pullback and retest a key level. I don't think we're going to get back up to the EMAs if this goes down and makes a lower low. We might be using the 10-period moving average for a little while. But I could see it maybe move down to 75 and then retest that lower level that you have on your chart. I have the same one, and that would be right here. So have it come down, make a lower low, come back, give me a turnaround at that key level.
And you can see we drew that this morning. That was the one from the 5-minute that even if you didn't use any other charts, the 5-minute showed you, hey, look, bodies to wicks, clear double tap, very clear level. And since opening range, we've been respecting it pretty strongly. Now, again, we talked, if we're in a downtrend, a common downfall of traders is to chase every long trade against this downtrend. But if I was trading short and I use this as a target for headroom, I'm walking away with a smile on my face, shaking my tail feather, if you will, like, yeah, looky there. I knew where I had to scale out, and it did it. And it turned around right where I took my fill. And somebody looks at you like, you got lucky. And it's like, no, I was basing off repeatable patterns of the market. Are there times that it doesn't happen perfectly? Absolutely. But you can't say you get lucky when the market shows you a very clear twice in a row. Just, I mean, think simply. Think like a child. The market's saying, it wants to go up from here, and it wants to go up from here. So if I'm in a down trade, I don't want to trade through the spot where it wants to go up from here. So if I can just take my fill before we get to that area, that is now a higher percentage trade. No matter what your risk management strategy was, anything of the sort, if you're able to take your fill in the same strategy before breaking through that key level at the bottom, that is a higher percentage trade based on the potential of the market to do exactly what it's doing now. So it doesn't make it unreasonable. This is one of those cases where, oh, is the trend ending? Do we need to be scared? No, the market's doing exactly what it kind of should be. We're watching a battle between, can the shorts continue through this level or do the longs hold? Not having the answer to that doesn't make anyone any less of a trader. It's just identifying those areas to say, okay, we're in a downtrend until we hit that key level. What happens at the key level will tell me a lot about this trend. Seeing how strong it rejects here tells me that even if it retraces and I want a short trade, I better fill before that same area again because of how likely it is to turn around there. Not that I can't trade short. We're still under all the EMAs. So
still looking short. Still looking short. Just want to confirm now that we're going to be able to get through this level. And if we're not going to be able to get through this level, then I need to use better position. I need to get this trade up, up around 95 to 4,000. In this scenario, I might even go all the way up to opening range before I get in a short trade. Because then I'll be at the 200. So, all right, folks, I think we're going to shut down the YouTube live stream. Thanks, everybody, for coming out. Great job today, Travis. Great levels. I mean, today worked out really well. So hang out, folks. We're going to continue trading. And again, for folks, for our summer evening schedule, we'll just be trading in the evenings on Tuesdays and Wednesdays from 7 p.m. to 9 p.m. East Coast time. So thanks, Travis. Great job today.
yeah, thank you. Thank you all for coming out again.
Good time.